Well, Rob just got back from a presentation with an economist at the National Association of Realtors, and he has four big takeaways for the housing market in 2025. We'll tell you what they are coming up next. Welcome into Legacy Beyond Wealth. I am Ben George with Rob Shelton, as always, founder of Axio Wealth Management. Good to see you again, Rob. And interestingly, you just got back from National Association of Realtors, I guess, convention there in Salt Lake City recently. How was that?
Yeah, thanks, Ben. Great to be back as well, and it was awesome. The Salt Lake Realtors Association every year puts on an economic forecast, and they bring in a local economist and then one on the national level as well. And it's always great to kind of see what their pulse is on the economy, especially with so much change that's happened in 2025, and we're only 3 months into it. It feels like.
Yeah, I know all eyes on the housing market. It's been a pretty wild ride the last 5 years, ever since COVID, and prices have increased, rates have gone up after they were at all time lows. So I'm curious to kind of get into this with you today. And again, as we do this, just encourage you to please subscribe to the YouTube channel. You can get in touch with Rob a couple different ways. You'll see them all in the description, but the website's the easiest: axiowm.com. So I'm curious, kind of getting some of these takeaways, Rob. Where do you want to start with this? Because I know that a lot you guys got into a lot with I guess was it Dr. Lawrence Yun? Is that how you say it?
Yeah, it is. Yeah, he's the chief economist for the National Association of Realtors, so has a real good eye on things on a national level. And one of the top things that he mentioned is more inventory coming on. I mean, that's been part of the problem. If you go up and you look for homes that are for sale, historically they're at a low, and there's a few reasons for that. One of them being that contractors were burnt pretty bad back in the 08, 09, 2010 era. And I remember working at a bank at that point in time, and the FDIC giving out the suggestion that maybe there's enough lots to last 25 years. Well, that's definitely not been the case. Those lots quickly got used up as the demand for housing came back. But I think a lot of builders feel a little bit of PTSD where they didn't want to overbuild too much, particularly because of COVID, and who knows what's going to happen at that point, right? No one wants to put a lot of investment into a house that may not potentially sell. And so the good news is they're feeling like there's builders that are getting back and that they're starting to build more supply. They feel like that's going to be about a 20% increase in supply this year. And so that should make it more available, that there'll be more transactions in real estate that take place. Now, I think that's important. Sometimes you hear a 20% increase and our minds automatically think about appreciation and maybe home values.
Mm-hmm.
And that's not what they're talking about here. They're talking about a 20% more in supply. But what that really means is that they're looking at only about a 2% increase in the overall value of a home year over year going forward.
So I guess that's good news for anyone that's been kind of on the sidelines waiting to find a home, or just hasn't found the right fit, or just the competition that's out there in the market because of the low levels of inventory. I guess this is probably a good thing then, right?
It is, especially when you think about it. The second point I pulled out of that is they started talking about how home ownership is directly correlated with net worth. And they had a great graph up there that showed that in 2024, a homeowner had an average net worth of 415,000, where a renter had an average net worth of only 10,000.
Wow.
That's a pretty big difference. And so, I'm fortunate. I've got into a home myself, but you keep talking about that next generation, being kids or grandkids, being able to afford a home. And what does that mean for them as far as wealth creation? And what does that look like? And so seeing more supply come on is good, but I think that also shows there's a big need to be more proactively planning to help future generations be able to have that dream of home ownership.
Yeah, those numbers are really startling. I don't think I've ever kind of seen it presented like that. And I guess a lot of that though is due to the home, right? A lot of that net worth is built through owning.
It is. And, that kind of segues into our next topic of the third takeaway that I took away. And we can throw up that graphic about home price gains since the first quarter of 2020, which was just before COVID happened. And the thing I love about this graphic is it lists each state and the appreciation in real estate prices during that 4 year period of time. And it's startling to be able to see those numbers.
Yeah, looking at them, I guess Utah seems to be on the higher end nationally, but I mean, even I guess the lowest state, Louisiana, had a 24% gain over that time period. So, it's one of those where if you were fortunate enough to be in a home at that time, you really felt the benefit of that ownership.
Yeah, and I think this is a broader lesson overall about just having diversification and different types of investments that you use. So, at this point in time, for whatever reason, real estate became really, really hot and one that gained a lot in value. Now, we've never seen one asset class lead from one category to the next for an extended period of time. Usually, what becomes hot eventually becomes cold, and what was cold eventually becomes hot. And you can kind of evaluate that to the stock market a little bit. We saw some great gains the last few years in the stock market as well. And I think that's the key is some people ask me, should I be in stocks or real estate? Really, we ought to have a combination approach and look at that and customize it to each of the clients. But I don't think we ever want to go all in one area or the other, because had you not had any real estate, you would have missed out on the appreciation numbers we're looking at here.
Are you ready to unlock the freedom to live your best life? Schedule your no-cost 60-minute discovery meeting with our team today. During this session, we'll take the time to understand your family story and financial dreams. Together, we'll craft a personalized roadmap designed to help you achieve your goals. Let's explore how we can unlock the freedom for you and your family to thrive. Just click the link in the description of today's show to get started.
Yeah, and does this ever affect conversations you have with your clients, Rob, and just in terms of, home prices being so elevated over the last 5 years? Is it ever you ever a conversation about, hey, should I downsize? Is it a good time to sell my home and move into something smaller? Or, hey, do I need to wait until prices maybe level out before finding a second home or somewhere I want to live in retirement?
Yeah, and every conversation is a little different with each client. But if I was to generalize it, I would say that I would break it into three different homes that a client tends to have during their lifetime. The starter home that gets them in there, then they have kind of the family home where they raise the family in, and then you have that, I would call it the retirement home that is a little bit different. It's got some bigger gathering areas when the family gets back together. Maybe a single level home that's a little bit easier in the later years of life and things of that nature. And so as we look at that, helping with those different transition points and understanding how the real estate market works and functions, it's really out there. The other one that's really big that hasn't been discussed a lot as well is you look at all the equity that's locked up for a lot of people.
Right.
And, you had this exemption that you can sell your home if you lived in it the last two of the 5 years and have a $500,000 exemption of taxes you wouldn't have to pay. So if we had bought the home for 500,000, sold it for $1 million, you could be able to not have to pay any taxes on the sale of that home if you lived in it for two of the last 5 years because of that exemption amount. But with the gains that we're seeing at this level, I'm seeing more and more clients get caught in that trap of selling their primary residence and potentially having capital gains tax where they haven't before. And that $500,000 exemption amount has not been indexed to inflation. So it was that same amount 30 years ago,
Huh.
but now more and more people are being caught by it. And they're just not aware because it's something that wasn't a topic of conversation because it was such a big buffer. So those are some things I'd definitely be looking at if someone was looking at real estate right now.
All right, very good. As we're talking about some of the takeaways Rob had from a recent presentation at the National Association of Realtors, and I know everybody's eyes are on mortgage rates. I mean, that's kind of driven the conversation in the housing market for a few years now. We saw them really low after COVID, touched around 8, I think, percent. Now it's starting to creep back down some. But what was your big takeaway on mortgage rates from this?
Yeah, this graphic that we have here it shows that 35% of homeowners don't even have a mortgage.
Huh.
They're paid in cash. They don't have any need for a mortgage, and that's a pretty big percentage of the population. As you take a look at it. So the next one that got me is there's 11% that are 3% or less on their mortgage, and then 18% that are below 4%. So, those people that are below 4%, you're looking at, about another 30% there that are below a 4% mortgage. And as we start having some conversations with clients, it's hard to justify giving up a 3 or 4% mortgage to pick up a 6 or a 7% mortgage. And one thing that Lawrence Yun went into was saying, hey, not really seeing a 4% mortgage being likely in the future years. And I think that's something of a reality that's kind of got to set in. And that might be something we tell our kids and grandkids about at some point. But hopefully, as we're telling them that, we're helping them understand how they need to be able to purchase a home at 6% rate mortgages.
Yeah, really good stuff. And yeah, it's interesting to see over a third of the mortgages or a third of the homeowners don't even have mortgages. I never would have guessed that number. I would have put it probably under 10% if I'd have just take a guess. So really, really interested to see that. So some good takeaways from this overall, Rob, kind of how does this play into what you do with your clients every day at Axio Wealth Management? How does the home factor into that planning process?
Look, it's all about living your best life because at the end of the day, it doesn't matter how many millions you have if it's not creating the life that you really want to be able to live. And so, as we take a look at the real estate side of it, these are conversations about how do you live that best life. Maybe to sum it up, I remember meeting with a client here just recently. And they're saying, "Hey, do we go into the extra cost of upgrading a home?" And they've got 5 kids, and it was kind of the starter home. And even though it will cost a little more financially for them to live their best life, it was feeling like they weren't living on top of each other in the starter home and to give themselves a little bit of space. So I think, we look at this and sometimes it's all about making those smart decisions with money about how making it work for you and creating that life that you really want to be able to live.
That's great. Axio Wealth Management, they specialize in this comprehensive wealth management is tailored for successful families. We've talked about it a little bit on the channel already, so check out those videos. But if you want to sit down and begin kind of talking about whether it be your home or whatever piece of that financial plan or the real retirement that you're thinking about, you can always schedule discovery calls about 60 minutes. It's in office or on Zoom. You can get the link down below and find a time on Rob's calendar to start that process. But it's so very important to do that to help secure your financial future. But really interesting takeaways, Rob. I know the housing market's on people's mind and something we're all kind of paying attention to as things fluctuate quite a bit. So thanks for these takeaways.
Thanks, Ben.